Here back for another update. Let's take a look at Bitcoin over here. And like I said, in this whole entire throughout this whole entire range, this is a bullish range. This is not Wyckoff distribution. This is Wyckoff reaccumulation. And right over here was your sweep of your sell side liquidity. Okay, so this is your sweep right over here. Then we had a very powerful advance to the upside, a move to take out this high, and then we had a market structure shift from there. A move down to fill some inefficiency below at this hourly FVG. And we also have a very nice sweep over here, taking out this sell side with your draw on liquidity being this hourly FVG below, right at the 50% fib from the bottom of wave 1 to the top of our sub wave 5. You see how we perfectly came down to that 50%? And if we take a fib all the way to the top here, we actually dipped into discount territory. So this over here would be your EQ, right over here. Anything below it would be considered discount. So we dipped below the EQ into discount territory, took out this adjacent low with your draw on liquidity being your hourly FEG. And usually when you have this exact same setup, like look over here, so whenever you have this setup in which you take out a very significant low, in this case we took out our sell side liquidity at 59,670, had a powerful advance to the upside. When you spot this powerful advance, you wouldn't get in. What you would do is wait for a throwback to the retracements below in order to catch some bids at the inefficiency. So we took out this sell side, which is a huge psychological support, then saw a very powerful advance to the upside, had a market structure shift after taking out this high. We had a move back down below equilibrium into discount territory, with your 1 hour FEG being your draw on liquidity. Now it's likely we're going to see a continuation up above the top of this range. We would be targeting 2 to 2.5 standard deviations at $88,000 to $93,000. Okay, this is your $88,365 and $93,653. This is what we would be targeting right over here. This is also a W, X, Y correction with your Y wave perfectly coming down to the 1.236, which is a common target for extensions of the Y wave or a C wave. Okay, you see how we perfectly came down to that 1.236 there? We also came down to the 38.2% fib when we measure the move from this low up to this high right here. Okay, you see how we came down perfectly to the 38.2% fib right there. So everything, and now what we're seeing over here on the 4-hour time frame is we're seeing a little bit of resistance here at this 4-hour OB. This is your 4-hour OB right here. So once you get over that level, it's game on. Right over here. Right over here. And especially getting back above this high over here at 65,538. In my opinion, it's going to break above. It's going to break above because this is a bullish setup, right? In regards to ICT trade setups, we have a WXY correction, a move down to extremes, and now we're seeing a nice push up. And like I said in my Twitter, right? This is pure Wyckoff reaccumulation, even down to the 3-minute time frame, right? This post over here was on May 1st. This is the 3-minute time frame. Okay, that was Bitcoin when it was right over here. Okay, if we go on the hourly over here, that post was right over here. We spotted accumulation at the lows right here. Okay, this box right here. So Now what we see over here is a bullish descending broadening wedge. Okay, we also spotted that here. So we had a 5-way move to the upside, and then a ABC correction. And I did say it looked bullish, and now we're above the descending broadening wedge here. So if we zoom out a little, what we see over here is a 5-way move to the upside. And then for our ABC correction, we have a 3-wave move down, 3-wave move up, and a 5-way move to the downside for our C wave in the form of a bullish descending broadening wedge. Now we're above the outer boundary of this wedge, currently finding resistance on this 4-hour OB, and once you get over it, then it's game on. Okay, at 63,157. What we also notice is an inverted head and shoulders pattern. So this is your left shoulder, this is your head, and when you see a break above the neckline, especially in crypto, whenever you spot an inverted head and shoulders, usually the first break above the neckline is usually the fake out before having the real blast off. Okay, so you have your left shoulder, your head, a move above the neckline, your false break, a check back, and then a continuation. Okay, so this is Bitcoin. Doesn't look bearish at all, in my opinion. This is USTD dominance. What we see over here on USTD. So now remember, USTD dominance, you can consider it like the DXY of crypto. Okay, if it goes down, Bitcoin will go up. If it goes up, Bitcoin will go down. We have a 5-way move to the downside over here, an ABC correction with your C wave rejecting at the golden pocket and the 61.8% fib. When we take a fib from this high down to this low, we also have a nice break of structure here. So we have our bearish bias. We have more confirmation for our bearish bias. When we go here on the daily time frame, what we see over here is Wyckoff distribution. So back in 2022, this was in a distribution pattern. We had a 3-wave move down, 3-wave move up, and now we're seeing a waterfall-like move down in the form of a 5-wave move. Okay, so this was our wave 1, 2, 3. Came up for a wave 4 over here in the form of a 3, 3, 5 Elliott wave flat pattern, rejecting off the 1.382, and now on the smaller time frame we're seeing a nice breakdown. Okay, so this is all bullish signs for crypto, and yeah, so you see as it's going down here, Bitcoin is going up. You guys see that? So it's very significant. I hope you guys enjoyed the Bitcoin video. If you have any questions, please feel free to let me know. And if you like the analysis, then please click the link in the description below to join the Discord and Patreon. You get access to over 350 plus assets and the ability to ask me any question you want. Hope you guys enjoyed the video. Peace out and take it easy. See you in the next one.